How do rich people's tax deductions translate into us subsidizing rich people? And does that mean that if we write things off, are we also being subsidized by other people? For some context, this question was asked because I said that when Bill Gates made an $80 million tax deductible donation to his kid's $35,000 a year private high school, it means that we, the average taxpayers, are now subsidizing Bill and Melinda Gates' kids' fancy education. That's perfectly fine if rich people want to send their kids to fancy schools. It's perfectly fine if they want to give those schools money so they have more resources for those rich fancy kids. But $80 million would have had a lot of taxes paid on it. Taxes that would have went into our system and been used to pay for things like schools for everybody. That's how taxes work, right? I don't have kids, but I pay taxes every year that get used to pay for other kids' education, and that's perfectly fine. That's the way it should be. But Bill gets to make the choice if I can pay all these taxes in that will go help everybody, or I can go spend that money on something that exclusively benefits myself, my children, my friends, and then I don't have to pay the taxes on it. So his kid's school gets a huge influx of donations and resources that otherwise would have been taxed. Then we, the rest of the taxpayers, have to make up the difference for the shortfalls of that tax revenue. Now, people can and will argue semantics with me on whether that's subsidizing or not, and you can technically argue that it's not, but it is. Because they get money that they wouldn't have had otherwise because it would have been taxed away from them, and they get to spend that money on stuff that personally benefits them, and we have to cover the bill. In this case, I really don't give a shit about the semantics. That's a subsidy. This is just one example. Every time big corporations or rich people get big tax breaks or big tax deductions, it's us subsidizing them. It's us paying their portion of the rent. For example, rich people get to write off their yachts as a second home, so they get to buy a yacht that exclusively serves them that they probably would have bought anyway. They get to write that off. That means they pay less taxes and we've got to cover the difference, or we've got to add it to the debt. But to really hone in on that rent analogy, think of the country like a house. We're all a bunch of roommates and we all split the bills. Got to pay all the utility bills and the rent and get the driveway plowed and the yard mowed, all of that. We split it all. Now, our rich roommates tend to use way more resources than the rest of us. Amazon, for example, insanely profitable company. They make all of that money by using way more of the resources in our little rental arrangement than the rest of us do. They use the post office, a public tax-funded organization. They use roads and bridges that are publicly funded that we all pay for. They use our public electrical grids, our water treatment systems. Well, they use all of this stuff way more than your average Joe, and they extract more resources out of the system and cause more wear and tear on our systems and our infrastructure. Wear and tear that all of us chip in to fix and maintain and upkeep. They chip in a lot less. You pay, what, 25-ish% on your income tax? Amazon pays 6% in corporate income tax. So in the roommate analogy, our roommate Amazon is using more space in the house and running up the bills and wearing out the appliances. Then Amazon turns around and is like, I get to write all of this money that I'm spending off on my portion of the rent payment because that's my cost of doing business. So you guys have to cover the difference. And then because all the rich people have, their own part of the house that they all hang out in this roommate analogy, let's say they got a little community fridge there because they don't want to walk all the way to the kitchen and eat with us peasants. Then Bill Gates goes out and he buys a bunch of steaks and he's like, I'm donating these steaks to the community fridge in this rich part of the house. Only a few of us have access to this fridge to eat the steaks, but it's a donation, so I'm going to write off the cost of those steaks on my rent payment. And everybody else is going to have to cover the difference. And that's basically the same thing as Bill Gates donating $80 million to his kid's private school and writing it off. Now, obviously, this isn't a perfect one-to-one example, but it should make it easier to wrap your head around why I would say in that situation that we are subsidizing our roommate Bill Gates' steak dinner, because he's getting a break on his portion of the rent for something that only benefits him. When it comes right down to it, tax is really just the rent that we all have to pay to live in a society. Is it the same for the rest of us when we donate money and write it off of our taxes? And the answer is no, not really. When you donate a couple $100 to the Humane Society, you are not directly benefiting from that. It's not the school that your kids go to, or like how the Bill and Melinda Gates Foundation invests in research, development, and companies that Bill and Melinda Gates personally own stock in, that in turn ends up making them richer in the long run, tax-free. You're not doing that, so it's already not the same. And you are not drastically altering your tax burden by throwing a couple $100 here and there to a charity that you believe in. A lot of this comes down to the fact that wealthy people pay taxes in a very different way than the rest of us, but that is a whole different rabbit hole. So you can still donate your meager donations and not feel like you're taking advantage of the system. Hopefully that adds a little bit of clarity to what I mean when I say that when rich people get to write off a bunch of things, that means that we are subsidizing them. Even if y'all want to semantically argue that it's not technically a subsidy. I don't care. It's still a subsidy.